Most beginners use RSI like this. RSI above 70, sell. RSI below 30, buy. And that is exactly why so many traders get trapped. Not because RSI is useless, but because most people use RSI like a buy and sell button. RSI is high, so they sell. RSI is low, so they buy. But the market is not that simple. In a strong uptrend, RSI can stay high for a long time, and if you keep selling just because RSI is above 70, the market can keep pushing against you. In a strong downtrend, RSI can stay low for a long time, and if you keep buying just because RSI is below 30, you might be catching a falling knife. So in this video, I want to show you a different way to look at RSI. Not as a tool to guess tops and bottoms, but as a tool to read momentum. The most common way people learn RSI is simple. Above 70 means overbought, below 30 means oversold. And to be fair, this is not completely wrong. If the market is moving sideways and price is just bouncing inside a range, RSI 70 and 30 can be useful. It can help you see when price is stretched too far in one direction. But here's the problem. The market is not always ranging. When the market starts trending strongly, RSI 70 and 30 can become very dangerous if you use them too mechanically. For example, price is in an uptrend. It keeps making higher highs and higher lows. Buyers are clearly in control. Then, RSI pushes above 70. A beginner sees that and thinks, okay, RSI is overbought. Time to sell. But in many cases, RSI above 70 does not mean price has to reverse immediately. Sometimes, it simply means buyers are strong. Now think about the opposite side. Price is in a downtrend. It keeps making lower lows and lower highs. Sellers are still in control. Then, RSI drops below 30. A beginner sees that and thinks, okay, RSI is oversold. Time to buy. But RSI below 30 does not mean price has to bounce immediately. Sometimes, it simply means sellers are still very strong. So the problem is not RSI. The problem is how most traders understand RSI. This is the most important idea in this video. RSI is not a buy or sell button. RSI is a momentum map. You should not use it like this. RSI high, sell. RSI low, buy. Instead, you should ask, who is in control right now? Are buyers stronger? Are sellers stronger? Is momentum increasing? Is momentum fading? Is this a strong trend or just a weak pullback? Once you start asking those questions, RSI becomes much more useful. Instead of seeing high RSI and immediately thinking, overbought, ask, high RSI in what context? If price is in a strong uptrend, high RSI can actually support the bullish idea. And instead of seeing low RSI and immediately thinking, oversold, ask, low RSI in what context? If price is in a strong downtrend, low RSI can simply mean sellers are still in control. So RSI doesn't tell you, buy now, or sell now. It tells you where the momentum is. Now, here's where my view is a little different. Most traders focus on RSI 70 and 30, but I pay more attention to RSI 80 and 20. Why? Because RSI 80 and 20 are harder to reach. RSI can touch 70 many times, but for RSI to reach 80, the market needs stronger buying pressure. RSI can touch 30 many times, but for RSI to reach 20, the market needs stronger selling pressure. So for me, RSI 80 tells me buyers are strong. RSI 20 tells me sellers are strong. But remember this, RSI 80 does not mean sell. RSI 20 does not mean buy. This is where many traders get it wrong. When RSI hits 80, I don't think, price is too high, I should sell. I think, buyers are strong. I need to watch for a possible continuation setup. When RSI hits 20, I don't think, price is too low, I should buy. I think, sellers are strong. I need to watch for a possible continuation setup to the downside. So RSI 80/20 is not my entry signal. It is the first clue that strong momentum is present. In an uptrend, RSI usually does not move randomly from 0 to 100. A strong uptrend often has its own RSI range. The way I look at it, in a healthy uptrend, RSI often moves between 40 and 80. RSI near 80 shows strong buying momentum, and the 40 area can act like momentum support. What does that mean? It means when the market is in a strong uptrend, RSI pulling back toward 40 is not always bearish. Sometimes it is just the market cooling down. Price takes a break, momentum resets, and then the trend can continue. But there is one important condition. Price still needs to hold its bullish structure. If price is still making higher lows, if support is still holding, if the pullback does not break the main structure, then RSI pulling back toward the 40 area can become something I want to watch. Not an automatic buy, just a zone where I start paying attention. In this video, I won't go deep into the setup yet. For now, just remember this. In an uptrend, RSI 40 is not always weakness. Sometimes it is where momentum resets. Now let's look at the opposite side. In a downtrend, RSI often moves between 20 and 60. RSI near 20 shows strong selling momentum, and the 60 area can act like momentum resistance. So when the market is in a strong downtrend, RSI pulling back towards 60 does not automatically mean the trend is turning bullish. Sometimes it is just a pullback inside a bearish trend. Price bounces, RSI recovers. Beginners start thinking the market is getting strong again. But if price still cannot break the bearish structure, if it is still making lower highs, if it is still rejecting from resistance, then that bounce might just be a place where sellers come back in. So in a downtrend, RSI 20 tells me sellers are strong. RSI pulling back towards 60 is where I start watching the reaction. But again, RSI touching 60 does not mean sell immediately. I still need price structure. I still need key levels. I still need reaction. I still need context. So here is how I actually use RSI. I do not use it like this. RSI 80, sell. RSI 20, buy. I use it like this. First, I wait for RSI to show strong momentum. If RSI reaches 80, I know buyers are strong. But I don't chase the move at the top. I wait for the market to pull back. If RSI pulls back toward the 40 area and price still holds a bullish structure, then I start looking for a possible buy setup. On the other side, if RSI reaches 20, I know sellers are strong. But I don't short at the lowest point. I wait for the market to pull back upward. If RSI pulls back toward the 60 area and price still holds a bearish structure, then I start looking for a possible sell setup. But that is the detailed setup. I'll save that for the next video. So keep it simple. RSI is not a buy or sell button. It's a tool to read momentum. RSI 80 shows strong buying pressure. RSI 20 shows strong selling pressure. And in a trend, the 40 and 60 levels can become very important. Use RSI with context, not emotion. If this helped, take 2 seconds to like the video. Thanks for watching. I'll see you in the next one.